What Californians generally know of and think of as Proposition 13 is actually a handful of laws passed by California voters as special rules. The laws define, expand, and narrow the scope of situations where transfer property laws apply. Lawmakers wrote Prop 13 to help Californians stay in California and help facilitate the transfer of property and benefits for themselves and their offspring. Proposition 13 limits property taxes, capping the tax rate to 1% of the property's assessed base year value plus any voter-approved local taxes and other assessments. This value can only increase by a maximum of 2% per year, regardless of market fluctuations or property values. Generally, under Prop 13, properties are partially or totally reassessed when there is a transfer of ownership, change in use, or with certain construction. A reassessment likely adds to the property's base year value. Prop 19 was largely written to help those 55 or older, or severely disabled, or affected by a natural disaster. Qualifying homeowners may transfer an existing property's base year value up to 3 times in a lifetime to any property in the state. The special property laws extend to children and orphaned grandchildren of property owners. Upon the owner's death, a transfer is exempt from reassessment up to the property's base year value plus $1 million. Additional appreciation is subject to reassessment. With the passage of Prop 13 and now Prop 19, Californians over age 55 have 2 primary base value opportunities as well as the transfer of property to benefit their offspring. Effective financial planning can help navigate property-related planning opportunities. Successful titling for real estate occurs when formally recording the deed at the county recorder's office, often to satisfy a loan or facilitate financing conditions. In some cases, investment properties can benefit from using investment laws. Property ownership can be just a sole individual, multiple individuals, partnerships, or a trust. Selecting and maintaining proper ownership is important, as a transfer may need to be administered by probate if there are no clear instructions. California is an original community property state, maintaining laws for Californians living in ceded territory after the Mexican-American War. California's Constitution states that both spouses jointly own property acquired during a marriage. A property's location will likely determine the property laws owners must follow. Consider working with experienced professionals, including real estate agents, attorneys, and title companies, to help facilitate a transaction and avoid complications. Also available for most types of property, on the day of death, an adjustment occurs to the property's non-taxable basis to the fair market value. Using this feature of the law, estate planning can reduce capital gains tax for beneficiaries if the asset is ever sold. Being financially organized helps prevent mistakes and avoid delays when settling an estate. Everyone can appreciate the peace of mind that comes from property due diligence.